Good evening, everyone. Time for another silver update. This is the 8-hour chart of gold provided by netdania.com. You can click on the link below. You can see here by the upward rising trend lines that I've drawn here that gold is starting to arc higher, and we may get, if this pattern continues, something like this. A key line that many have pointed out is the 1625 line. That's going to be a line that we're looking for to break through. You can see we stalled out and we're now trying to rally towards that, but we are rounding higher. So that's a critical line for gold, and of course with silver it's going to follow. Silver is not quite as strong. You can see silver is rounding off to the downside, and that's just an opportunity to stack more silver. Anything around 27 or so, you can see we can draw a number of trend lines here. We're just kind of going sideways, but anything around the 27.28 price is going to be a fantastic stacking price for silver, because it just, in my opinion, it's having a very difficult time going any lower. And I think it was SR Sirocco, who's covered on Silver Doctors, pointed out that the price to mine silver is roughly $30. So we're actually beneath the price it takes to mine it. But that's anyone's guess, that's speculation. The shills always come out and say that it's $5 an ounce to mine silver, and that's a patently ridiculous number that is based upon silver as being a byproduct, and of course charging none of the costs to the silver. So that's an absurd idea. If you've ever watched the video I've covered a number of times that shows you all of the processes involved in getting an ounce of silver from tons of rock, it's just absurd. But so it's highly likely that we're actually beneath the price to mine, and of course that has major implications for the miners, and I'll talk about that in a little bit. Now let's go over to the questions of the night. There's a number of them to address, and I don't have a lot of time because I have a lot to cover, so let's just go through them real quick here. This is from the Muzzman, and he says, Brother John, first off, I'd like to express my deepest gratitude for everything you do. I'm a religious follower of your videos and blog. If this is a paid subscription service, I certainly would be a member. I've been stacking precious metals for some time, but I do not own any Bitcoins. As a Bitcoin newbie, it's a little difficult to wrap my brain around it. I downloaded the platform, but I don't see how I can open an account or even purchase Bitcoins. Can you spend 2 minutes explaining how a first-time Bitcoin user can create an account and actually purchase, manage their wallet? For lack of better words, I just don't get it. How do these coins trade? I tried a tutorial to help me out, but that's not easy. Sorry for the rookie post on Bitcoins. I was anti-Bitcoin for a long time, but have since seen the light and want to get involved. Thanks again for everything you do. The silver community is lucky to have you. Okay, so let's go real quick here. There's a client. You can go to bitcoin.org, download the client. That's the thing. It used to let you mine, but it's really just a tracking system to track the number of Bitcoins you have. You're going to download it. You're going to get a wallet. You're not going to have any Bitcoins. So unless you're a miner, which is highly unlikely, you're not going to have any. That means you have to buy them. The exchange that's out there right now is Mt. Gox. There are others, but this is the big one. I think they say 80% of all trades. You can see the price is about $12 right now. You can go to Bitcoin charts to see the price chart. But basically, if you want to buy Bitcoins, you either have to sign up for an exchange like this, go through all the complex processes of linking your bank account or being able to deposit money and then buy them at these prices. You can buy them and sell them, and this is where I have an account to do that. But there are other places you can do that. So if you're not a miner, then of course you're going to have to buy them. That's not too much different than gold. If you don't have any gold and you can't mine it, then you're obviously going to have to buy it. So that's hopefully that's an explanation. Now to the next question, your exit plan from precious metals, and this is from Old Ford Truck 1. Brother John, I want to thank you for all your hard work in trying to help people understand and prepare for an uncertain future. My question has to do with your exit strategy from the precious metals. When it comes time to put your stack into use, what do you intend to purchase? My stack is for retirement, but I expect that I will need to reinvest into something that will generate an income stream. Who knows what things will be like in 20 years when I expect to use mine, but I was curious about your strategy. Thanks, all Ford. Okay, now if you watch my Office series, I have a video on selling your silver. I'll link it below. And the protagonist states that he wouldn't sell his silver for $1 billion. And then there's a series of exchanges explaining why that's the case. The point is that if you're invested in silver, you're probably going to want to wait for the next currency to come around. It's highly likely that the current currency system that we have is going to collapse, and on its way to collapse, it's going to hyperinflate. Now, if you're a debtor and you have some debts balanced against your assets, and I've explained that before, I have something like that. I like to keep some debts and some cash. And if your debt obligations are in dollars, then ideally, if everything works out, if the price of silver rockets to the moon, then it's quite possible that you could take a small amount of your stack, trade it for dollars very quickly, and pay off your debts, pay off your house, pay off your credit cards, pay off whatever you have, pay off your cars, etc., for very cheap dollars that you've waited for as your silver has gone up. Now that's a strategy that may or may not come to pass. There's a lot of unforeseen consequences that can happen, but that's the potential strategy. Otherwise, you're going to want to wait for the next currency to arise, and then it's much more likely that under that currency, silver will be more fairly valued. My guess is, and that's just my guess alone, but my guess is that will be an Asian currency, because I don't believe that the powers that be are going to be able to succeed in instituting a world currency. I actually think that the helm will be taken by Asia, and that the United States and England and Russia will fall behind, and the new emerging currency will come out of the East. And the next question is physical versus mining shares. Hey brother John, I know you have covered this topic before. I would be very glad if you could do it again, since I misunderstood your arguments. I know you don't like mining shares at all, so I was wondering why so many experts are advising them. Even Jim Rogers said once in an interview, if you can pick the right mining stocks, they would probably outperform physical. That's what happened on a historic basis. I stick with Bob Chapman for a long time. He was favoring mining shares over physical, something like 60% in shares. I would guess that a man with his experience knows what he's talking about, and that idea of nationalization of mines is ridiculous. Can you please explain your view against mining shares and why you think this time is different and physical is a better way to go, or are you just playing a safe game? I think one of your arguments was the government can short it to infinity or something like that. Can you explain it? It doesn't make sense. Thanks for the answer, and keep up the good work. I love visiting your site. Okay, let me summarize the three major reasons that you don't want to invest in mining shares. He already mentioned one, and that's nationalization. That's the ability of the foreign miners, and by the way, most of the miners are south of the border. 50% or roughly of the silver that's mined is mined in Central and South America. We've already seen in Bolivia the nationalization of the mine there, and I expect to see a lot more in the future. The second very important reason against mining shares is that if you believe, and this is only if you believe that the price of silver is suppressed, then the mining companies cannot make a profit. Because if inflation continues to rise and the inputs for mining, such as fuel, machinery, labor, etc., taxes, these continue to go up, but you have a suppressed silver price, then obviously you're mining at a loss. If you think about any other industry, whether it's fast food to automobiles, if you had the government involved in suppressing the price of your final product, but the inputs of that product were going up in price, obviously you're going to be in a bad situation, and you don't want to be in that business until the suppression is ended. And the third reason, of course, as he alludes to here, so I talked about naked shorting of shares. This is different most of the people who cite the mining share returns are talking about returns that happened in the 1930s, in the 1970s. These were times when you actually had more honest markets. You did not have the corruption that you have today. But with failures to deliver and the DTCC and other things where basically these people who are involved in the counterfeiting of shares have the ability to counterfeit an unlimited amount of shares, and they can dilute you regardless of how big your position is or what percentage you have. So those are the three top reasons why I do not recommend mining shares. Now, of course, a fourth one I will allude to here is that if you are trying to make money off of the precious metals, and of course I'm in the business of informing you and I'm not really selling you anything, but I can tell you from experience that if you are just in the business of educating people and you're just trying to give them information and perhaps a good deal, maybe some kind of silver. I don't sell anything silver wise, but if you did, then you're talking about a small markup. And there's a strong temptation to get involved with payments from companies, etc., or from numismatic companies, etc., or other things. It's very difficult to be in a business where the primary product that you're dealing in is suppressed in price without getting into some side business. And I'll just go ahead and leave it at that. And to silver manipulation. The last question I'll cover. Hi, Brother John. I was watching Capital Account, and Chris Powell from GATA agreed that what Blythe Master said, which is JP Morgan does not manipulate silver on their behalf, but the U.S. government is the one who controls the market through JP Morgan. Here's the link to the show. I would just like to hear some of your thoughts about this and how can buying silver crash JP Morgan as Max Kaiser says it will when the U.S. government controls it? And do you agree that the U.S. government is the one who manipulates the silver market? If not, who is? Well, I would have to agree that the U.S. government definitely has a very large hand in the manipulation of the silver market. I don't think that there's really any argument that one could make that JP Morgan has an interest one way or the other in the direction that silver goes. And I think that when you look at what Blythe Master's comment was, that's pretty much the basis of her comment, that JP Morgan doesn't really care whether silver goes up or down. And I agree with that. As far as a neutral bank or brokerage, it doesn't really matter where any market goes. The question is JP Morgan operating as proxies for the U.S. government? I don't think there's any question about that. JP Morgan doesn't have any interest in suppressing alternative currencies, while the U.S. Treasury and the Federal Reserve have a tremendous interest in suppressing alternative currencies. We saw that with the London gold pool. The U.S. conspired with a number of European nations to suppress the price of gold. Ultimately, that was broken, and that's a conspiracy, something similar to the conspiracies that are admitted to later, decades or hundreds of years after all the people involved are dead. So, yes, I believe there is a conspiracy to suppress the price of silver, and yes, I believe that ultimately the Federal Reserve and the U.S. government through the Treasury are behind it. Now, let's get to the main story of the night, and that's going to be, well, before we do that, let's do a quick article here on Peregrine. This is something that broke tonight, and this is the CEO of Peregrine was indicted for lying to regulators. Just going to read some of this and comment. Reuters, Peregrine Financial Group founder CEO Russell Wassendorf Sr. was indicted on charges of lying to regulators a little over a month after his botched suicide attempt and his signed confession to bilking customers of his brokerage for years. Wassendorf overstated the value of PFG's customer segregated funds by at least tens of millions of dollars to the Commodity Futures Exchange Commission, according to the indictment filed in federal court in Cedar Rapids, Iowa. The indictment carries a possible maximum sentence of 155 years in prison and a $7.75 million fine, 93 years of supervised release following any imprisonment, U.S. Attorney's Office said. The public defender, okay, so there's a red flag. Why does this guy have a public defender? Does he not have any assets to hire a lawyer? Well, that's, of course, the corrupt U.S. legal system, which before you're proven guilty seizes your assets, so you don't have the ability to defend yourself with a lawyer. So that's a red flag there. This guy's already convicted. Peregrine, which operated PFG Best, filed for bankruptcy protection on July 10th, one day after Wassendorf Sr. attempted suicide, and left a note describing how he bilked customers of more than $100 million over nearly 20 years. Using little more than a P.O. box, laser printers, and Photoshop software, Wassendorf Sr. said he forged and intercepted financial statements that were mailed between U.S. Bank, where some Peregrine customer money was held, and the firm's auditors at the National Futures Association. He also said he spent most of the money, stolen money, to keep his brokerage afloat. So here in a country where we have a FinCEN, I'm not sure if you're familiar with that, but that's the federal regulations about chaining financial transactions, where transactions above $10,000 cash are reportable to the federal government, and a series of transactions, say $3,000 transactions that are aimed to circumvent that regulation, are also reported by the bank. So basically, we have banks that are locked down as tight as you can imagine to prevent corrupt money laundering and everything else. But for some reason, this guy was able to wash around $100 million for 20 years by sending it to a P.O. box and then intercepting it and creating forged documents. But of course, again, the regulators were asleep at the switch, and it doesn't come out until the fraud is over. So I'll leave you to make your own conclusions on that one. And then I wanted to take you to the main story of the night, and that's going to be Paul Ryan. Of course, we all know that Paul Ryan has been selected as the vice presidential running mate of Mitt Romney. Now, this is a bid to the Tea Party Republicans, who primarily, I think, probably backed Ron Paul, but that whole thing was scuttled. Now, here's a comment from a Tea Party person here who says, "Obviously, those votes certainly don't make me happy," said Amy Kremer, chairwoman of Tea Party Express, one of the country's most influential Tea Party organizations, though she was quick to say she's pleased with Ryan's selection as Mitt Romney's running mate. Quote, "I think he's somebody who will stand up and accept responsibility for previous actions." Of course, this is his betrayal by voting for banker bailouts and Medicare, etc., etc. More importantly than that, he knows that we're in serious financial trouble, and he has a grasp in the big picture all the way down to the little details. There's no perfect politician, Creamer added. There are many of them that have had votes that we aren't happy about, but we're in a different time period, and these votes are actually what led to this movement being formed. So there's the Tea Party being co-opted, and there's Paul Ryan, your next neocon candidate. Of course, I've always advised that if the candidate is not Ron Paul, then you've been co-opted. Now, this document here is at paulryan.house.gov. This is Paul Ryan's Path to Prosperity 2013. Sounds a lot like Newt Gingrich's contract with America. We know how that ended, but let's go over these points real quick here, because this pretty much summarizes Paul Ryan's views. Starts out with the first one: a military that keeps America safe by letting national strategic priorities determine spending levels, not the other way around. So that's kind of a interesting way of saying things. We want to let national strategic priorities determine spending levels. Well, what are our national strategic priorities? That's the question we never have answered. Critics of the neocons and liberals would say, well, we went and invaded Iraq, and supposedly the liberals tell us it was for oil. Well, where's our benefit there? I think the Iraqis pay 10 cents a gallon. We're paying almost $4. We were in Afghanistan, and the poppy fields are blooming, but where's our benefit? So what are these national strategic priorities that Ryan is talking about? No one really knows. There's allusions to the threat of terrorism, etc., but it's really just a bunch of neocon nonsense. Next, a free enterprise system that is reinvigorated with bureaucracy restrained, the rule of law restored, and cronyism and corporate welfare eliminated. Now, do you really believe that? Come on. A safety net that directs assistance to those who need it most, provides greater incentives to work and save, and strengthens programs aimed at job training and helping Americans get back on their feet. Well, we don't need job training in America. There's plenty of people who are trained for high-tech jobs, all kinds of jobs. That's similar to the Democratic line, and here he is parroting it. We don't have a problem with job training. We have a problem with jobs. So that's that. Health and retirement programs that avert a sharp disruptions to come as a result of the president's policies, protect key commitments to seniors, provide greater choices, better health, real security for future generations, blah, blah, blah. Nonsense. A tax code that fosters growth and job creation by lowering rates and getting rid of special interest loopholes that mainly benefit the politically well-connected, distort economic growth, and enforce unfairness in tax law. So Ryan is tipping his hat to Obama, apparently, because Obama says that the rich are better off under the current tax code. It looks like Ryan agrees with him. Finally, a budget process that restrains government spending and restores certainty by forcing policymakers to provide solutions for the nation's fiscal future. Well, I'm not going to hold my breath. So it appears that Ryan is just another one of the same. Now, let's look at an article. I actually don't agree with everything they write, but this is an article on Politico.com, and it's an exposure of Ryan, what he voted for. Ryan voted for the $700 billion bank bailout. Okay, you need to remember that. All you Occupy Wall Streeters and all you Tea Party Republicans need to remember, Ryan voted for that bailout. He also voted for the biggest Medicare expansion in U.S. history, a massive highway bill that includes the Bridge to Nowhere and other big-ticket priorities when George Bush was president, going to bat for high-spending GOP agenda that the Tea Party base now looks on with regret. So Ryan is another one of the big spenders. You have to remember that the difference between Republicans and Democrats is that Republicans support big spending for the war machine, which is putting bases and supporting bases all around the world to support their bedfellows and cronies in the military-industrial establishment, while the Democrats support big spending for the government workers, unions, etc. So it's big spender political party A versus big spender political party B. You can see here that federal revenues, tax revenues, are about $2.3 trillion. Ryan is proposing $700 to $800 billion in defense. I don't know what we're defending ourselves against. I would have to say it would be offense. But offense expenditures, so roughly a quarter of that. You can see we're looking at a quarter of that in Medicare, a quarter of that in Social Security, and there's your defense. So what's left over? Of course, you've got interest on that debt, and if that interest rate ever arose to any reasonable amount, then of course it's certain bankruptcy. So would have to say more of the same. Don't get fooled again. They've managed to torpedo the Ron Paul candidacy, and Ron Paul was the only candidate who was promising to cut $1 trillion off of federal spending. And of course, that's the only answer. Ryan's proposal is to cut federal spending, but he doesn't really show how to do that. And what we need to do is we need to cut spending, and we need to cut taxes even more. Most of the Republicans are interested in cutting taxes, but when it comes down to cutting spending, they never really cut it. So what we need to do, which Ron Paul was proposing, is we need to cut taxes. If we cut taxes by 20%, then we need to cut spending by 40%. If we cut taxes by 30%, we need to cut spending by 60%. So we need radical cuts in taxes and even much more radical cuts in spending. And of course, neither big spender party A or big spender party B is interested in doing either of those. So regardless of which party is elected, we're going to see more inflation, more printing by the Federal Reserve. They'll probably hold off until the election is over with, and then when we see the consequences of that election, which is going to be more spending, then the Federal Reserve will probably get into high gear. My guess is that it will probably be Romney, and that Obama won't be able to swing the disenfranchised government print me more money and support me vote, but that Romney and Ryan will be able to swing the other vote of big government spending, and then we will get more money for defense and no cuts in anything else, and then we'll see a budget deficit in the $2 trillion range. And of course, silver is just going to rocket higher, and gold is going to rocket higher once this spending is announced. And that pretty much seems to be baked in the cake, because it's fool me once, shame on you. Fool me twice, shame on me. And we won't get fooled again. And we'll talk to you next time.